The market climbs a wall of worry. It's a super famous Wall Street saying, but what does it mean and why am I talking about it now? Well, essentially, what we're talking about is the fact that the market seems to generally go up and start new bull markets when the news looks the bleakest, things make absolutely no sense to move higher, and that is exactly what we're seeing right now. So, I talked about this potentially being a FOMO rally on Twitter. It got some, discussion back and forth. So I thought, like always, I would come to you. So first of all, I want to just highlight this chart. And you can find this everywhere. Everyone's kind of made their own version of it, but I just called it reasons to sell. And the fact that over time the market generally moves higher, even after wars and 9/11 and terrorist attacks and all these things. Eventually, capitalism finds a way, sorts it out, and we start to push higher. But right now, I think this is important because of what's going on here in the market. And pretty much every day or every few days, we're seeing every dip get relentlessly bought. Why do I think that's occurring and why do I think that it could potentially continue to occur is all about positioning. So at the end of the day, if you've been following me for any length of time, you know I'm not a big news guy. I don't really care too much about the news of the market. What I care about is price action and sentiment and positioning, because those are where I really think it makes sense to make sure that you're on the side of those as opposed to the news, which is nebulous. Is a tariff a good thing, a bad thing? 10 economists will debate about it for ages. So when I talk about positioning, I'm basically talking about, is the average market participant long, short, or in this case, underexposed? So I have a chart right here, and this is the commitment of traders report. And this shows the average or the net large speculator. So if you're taking a big bet on the market, if you're a big guy on the future side of things, are you long? Are you short? What is it? Now, they were obviously the most long at the top, which is one of the reasons why we can cause a collapse like this. And now they are flat to net short as the market's moving higher. So we all know about a short squeeze, the idea that if everyone's short and the market moves higher, those people have to cover. Now, what do I mean when I say underexposed, which I think is what's going on right here? Now, let's put ourselves in the shoe of a institution. We're a large institution, we're a bank, we're a broker, whatever it is, a hedge fund. And we as a hedge fund are supposed to be outperforming the market, and we're supposed to be making some sort of decision that makes sense where clients can pay us a lot of fees to do better than the market. Well, imagine if, as that, you had some sort of trigger that took place to get you out of the market at the lows, and now the market is screaming higher. You're not necessarily losing any money, but when you compare yourself to the S&P 500, you definitely are losing money and you are underperforming. So what will happen is you'll have to report these returns to a client, and they're going to say, well, the market is now flat on the year. You puked out a lot of your positions at the lows or even underperformed, right? So maybe you went to 30% cash, something even very marginal and sensible, to be honest, with what was happening in the market. Well, you're not flat now. You're down a couple percent where the market is up a couple percent. That is really hard to explain to a client because the client just, okay, well, why am I paying you fees if I just put my money in the market? I'd be doing better. So what happens in that case is that every time the market dips, it creates this underlying bid, because if I am underperforming or if I am underexposed to the market, when the market dips, I'm going to be buying that dip aggressively because I'm getting a slightly better price than what's going on so that I can get back to this full exposure. So at the very least, I can tell this client that yes, I was underperforming the market, but don't worry, we are fully exposed or we are overexposed. We use some margin, we use some futures, some leverage derivative products to make sure that if the market continues higher, we will catch up and surpass the market. That is what I believe is happening right now, and you can see that in just the price action when it comes to even intraday. Every time we dip here at all, the market just comes roaring back, just showing that there is this underlying bid. If we go to like an hour chart, it makes much more sense. Every little dip gets bought over and over and over and over again. Now, eventually, this is going to change. Eventually, there's a moment where people will be exposed enough and quite likely overexposed, and then we'll dip back down. But until that happens, I think you're going to have this kind of relentless bid in the market. So the question is, if what should you do? And I know a lot of people out there who got very nervous and got rid of a lot of positions at the lows. And what do they do? Well, first of all, to talk the Stats Edge book a little bit, we trade systems. So, we are long Hims and Palantir and Netflix and a lot of these names for much lower prices. So that is definitely helping in this scenario. We are buying things currently as they're breaking out of trends. That is helping us out in this scenario. If you are not in the market right now and you did puke out at the lows, this should just be more of a lesson for what you're potentially going to do going forward. I don't know what the market's going to do right now. This could be the absolute top of this particular cycle and we could pull back to 550 or below and then rip from that. I don't know. I have no idea, right? But what I do is I think in systems. So what you need to do is next time you have something like this occur, you have a system behind it. And one of the simplest systems out there is something like the 200-day moving average on the S&P 500. If you are below, just add this in, if you are below the 200-day moving average, then you maybe exit your position. And if you're above the 200-day moving average, maybe you don't. And that becomes an easy thing to do. I don't know what all these are, but yeah, this one here is the 200-day moving average. So you just say, okay, if we break below the 200-day moving average, I'm going to get out of my position. And then we break back through the 200-day moving average, I'm going to get back in. At least that is rules based and systematic. So it gives you some sort of idea to get in. What a lot of people are having most of their problems with is getting caught up in the news cycle of what did this politician say to that politician, or what did this world leader say to that world leader. And those people are having kind of the biggest and the worst problem because my point of the wall of worry is there will never be an all clear. There will never be a point where they go, okay, there is nothing bad happening in the world and you can get back into your positions, you can invest in your stocks. It's just not the way things work. How things work is that during crashes, everything will look ugly, and that will probably be the best time to buy. So develop some sort of system, either use our systems over Stats Trading or develop your own system. But I personally believe, just a little hot take here, that this is going to get to all-time highs fairly quickly in the next weeks to months. And then from there, I think it will be the most hated rally of all time because there is so many people under position. So this data of how people are in or out of the market, this updates weekly. So it'll be very interesting to see next week. Do we actually have them buying and now they're kind of caught up and net long pretty significantly on the market? Or are people still not believing this rally and shorting into it? I don't know. I just want to explain to you why I think there's this relentless bid and why I think this relentless bid could continue going forward.